Hey everybody, welcome back to the Live Joy Southwest Florida channel. We normally are talking about floor plans and communities and all things real estate related. Today we're going to do something a little bit different. It's a topic that's super relevant. We're going to talk about your home in a different way. Things like, should we pay off the mortgage early? Should we downsize? Should we upsize? Should we take that money that we have and invest elsewhere? Should we take some of the money in the form of an equity line and do something differently? These questions are coming up all the time. We're experiencing that with our customers and frankly, with ourselves. So we're going to dive into this, talk about, financially what you can do with a house, what your options are. We'll unpack the pros and cons of that right now. But something I have to say right out of the gates, I'm not a financial planner. This is definitely not advice. These are bits and pieces of conversations that we've had with our customers, with ourselves and others. Any decision that you're thinking about making, you really should, consult either a tax advisor, your wealth planner, whoever it might be, a certified financial planner, etc. All right, let's dive in. So before we dive in, there's a quote that I really like. It's by Susie Orman, and she talks about a home being a keystone of wealth. And she says it from both a financial affluence perspective, but also an emotional security. There is something very comforting that comes from owning your own house and having control over that asset. All right, so let's talk about one of the trends that we're seeing. Some of our customers are beginning to invest a little bit less so that they can pay more towards their mortgage in the attempt to pay it off early. We're seeing other people that have a lot of equity, which is most homeowners in the US right now, actually sell their home so that they can take that equity and buy a smaller home in cash. Guess who? Yes, we're in the process of doing that as well. We can talk about that in a separate video. But we're also seeing people that maybe are deciding, do they want to take the equity out of the house and even invest it? So there's a lot of conversations that are occurring all around a home. And it's a bit of a different perspective because many people view homes as like, it's not a house rather, it's a home. It's a place that we make memories. Other people have less emotional attachment to it. Angie and I've lived in, I don't even know the number now. I think we're pushing over 20 houses at this point. So for us, it's a tool for financial growth. All right, so the age-old question, is paying off your mortgage early in your best interest? And the answer is, it depends. Depends on what you're trying to achieve. It depends on a lot of circumstances. At the end of the day, there is no one answer. So let's begin to unpack some of the questions that we've had, some of the examples that we can cite. And honestly, before we do that, I want to talk about, because I think this is a key part of probably the psychology of this. There's what we'd call financial decisions, and then there's things that maybe we would call a money decision. And I heard this on a podcast recently. It was the first time I'd really thought about it this way. You can argue, and there's plenty of videos that you can watch on YouTube and elsewhere, that if you have low interest debt, aka a mortgage, you can do better in the long term in the market and other places. So the financial decision would largely lean towards, no, it doesn't make sense to pay off the mortgage early from a financial decision perspective. But then there's the money decision. What if you're in a job, maybe like real estate, where you can have a really great month and then a leaner month the next month, where your income ebbs and flows. It comes up, it comes down. The idea that you have less burden on the months when there's a lower amount of income might be attractive to certain people. There's a lot of contract employees now where they see that same kind of, the spikes and then the trough, or the peak and then the trough. So, the money decision may make more sense than the financial decision because of living the lifestyle, feeling more comfortable, not feeling the stress or the burden that you carry every month with a larger payment. All right, so let's start with the advantages. One is the mortgage interest. Obviously, if you're going to pay off your mortgage early, you're going to save a lot in mortgage interest. And that could be anywhere from tens of thousands to, quite frankly, hundreds of thousands of dollars, depending on your mortgage amount and how aggressively you pay it off. All right, now the second one is the psychological piece. I mentioned it when I talked about the podcast that I listened to. Not having a mortgage payment looming over your head and owning the home outright honestly will make you feel better, especially in the months where you might have a low income month. All right, so the third one is improved cash flow. And honestly, this is a big part of why we're doing what we're doing. So we are selling our home and we're going to downsize, and downsize might mean a couple different things. We're going to downsize the payment, but the home itself will actually be quite a bit bigger, but it's in a neighborhood that costs a little bit less. So, for us, we effectively can sell our home and buy the next one almost in cash. We're close, but it's going to free up a good amount of cash flow. Why? Because the CDD is lower, the HOA is lower, the taxes are lower, and obviously we're going to have a much lower mortgage. We have a ton of equity built up in the home that we're in. Why might we do that? Well, because of the free cash flow. You see, I made this little deal with our kids. I said, you do your part, you get bright futures in the state of Florida. That's paid in-state tuition, which is pretty freaking amazing. Anyways, they did their part, and here I am now, 2 kids in college and about to have a 3rd one, and I need to do mine. And quite frankly, I don't want to have to borrow. I don't want to take out debt. By making this change, we're able to effectively cash flow college for the kids, potentially make other investments that we're looking at in the future. It's going to do some things different for us aside from having a larger mortgage payment. We're still going to have an amazing home, but it's going to allow us to do some different things financially as well. All right, and the 4th one is going to be risk reduction. Without having a mortgage payment or a larger mortgage payment, you're just less vulnerable. You're less susceptible to market volatility or a loss of income, as an example. The lower the burden, ultimately, the easier it is. All right, so we talked about the upsides. Let's talk about the downsides because yes, as you know, there are pros and cons to everything. And the first one we're going to talk about as a downside is opportunity cost. And what do we mean by that? Well, if you are one of those lucky people that's sitting on a 2.8% mortgage rate, maybe it's at 3, you're in a pretty good position to take your money and invest elsewhere if you have the means to do so. And the S&P, as an example, has earned, I think it's 10, almost 11% for the past 100 years. So over the long term, which a mortgage often is 20 to 30 years, you're going to be able to outperform that. Even if your mortgage is 6 to 7%, which many people have today as well, you still have an opportunity to outperform what you're going to pay in an interest rate. All right, so another downside, maybe number 2 we'll say, is illiquidity. That sounds weird. We've been making some illiquid investments in some private equity and some other real estate syndication, and it's not like the stock market where you can just trade openly and you decide, oh, I need to pay a tuition bill, I'm going to sell X amount of Pfizer or whatever you've got. Illiquid investments, just like if you were to pay off your mortgage, your money is now tied up in the equity in the home. To be able to access that money, you're going to have to either sell or take out an equity line. All right, the 3rd downside, and it could be taxes. It's harder to do this now. Unless you itemize, it's going to be super hard to really get any benefit from mortgage interest in the form of taxes. But if you do itemize, you do have the opportunity to get some tax advantage still with the mortgage interest. So again, talk to your tax advisor, talk to your CPA. They're going to be able to assess that situation for you. All right, and the next one is the inflation advantage. So let's talk about this, because when I hear advantage, I think, well, how's that a downside? Just like the mortgage interest we talked about being a missed out tax, it's an advantage by getting the tax benefit. It's a disadvantage if you pay off a mortgage, because then you're not going to get the tax interest mortgage interest rather, that you get to write off against your taxes. Same thing with the inflation advantage. If you take out a low interest mortgage long term, ultimately the cost of your dollars are going to be lower long term to pay off against that mortgage. So effectively, you are improving and getting an advantage there. That's the downside of paying it off early. You don't get to take advantage of that long term. All right, so now let's talk about downsizing. It's something that we're hearing a lot from our customers, and it comes in a few different formats. So the first one we could talk about is the equity utilization. Like in our situation, we have the ability to sell a home, take a large amount of equity out of that home, and effectively buy the next one for almost cash. Many people are in a position to buy the next one in cash. So that's the equity utilization. The second one I want to talk about is lower expenses. It makes sense, right? So if you take a bigger house, downsize, you go into a smaller home, less square footage to heat, to cool, electric, I mean, all of that stuff, you're going to pay a little bit less to clean, quite honestly. And then the third one I want to talk about is the lifestyle fit. So it could be circumstances changed, a smaller space just better suits your needs. Maybe you're in retirement, or again, the kids have grown up and you just don't need the same square footage. There's a lot of reasons why people are choosing to downsize. Hey, I'm really curious, where do you stand on this topic? Drop it in the comments below. I'd love to hear, what your thoughts are. If you can do me a favor and just drop, a comment about it makes sense, or I'd rather live in the dream home and pay more. No, I'm actually going in this way. Whatever your circumstance might be, what do you think? Does downsizing make sense? All right, so we talked about paying off a mortgage. Let's talk about the flip side. And what if you took that money that you had to pay off extra every month to ultimately pay off the mortgage early, and you made investments? What does that look like? All right, so let's say you do choose to make investments if you have a little bit of extra money as opposed to paying down the mortgage early. So what might that do for you? And I talked about this one already, kind of hinted at it with one of the advantages, but it is that the historical long-term performance of even the stock market will outperform your interest rate. So if you look at the S&P, and I talked about this, and I got a graphic here, but we'll throw it up on the screen, it's a pretty good return. If you look at the long haul over the last 100 years or so, you're going to average in between 10, 11%, somewhere in that ballpark. So you can outperform. And obviously with that horizon, a mortgage is long-term. You got to think long-term as well. If you start making additional investments, you have time on your side. And that's where number 2, compound interest really kicks in. And for fun, I figured I'd share this story. Kids and I and Ange actually were sitting at a restaurant not too far back now, maybe 2 or 3 months ago. And this all started from, you guys might laugh, we got these letters in the mail from Bank of America that said, due to inactivity, your accounts are going to be closed. And we were like, what? But basically these were accounts we had opened for the kids. When they were really, really young, we would take like half of any gift that they received in cash, whether it was birthday money, Christmas, etc. And we had them put it in the bank, and with the goal that they would use it towards college or something more meaningful. Well, anyways, those accounts basically have kind of just floundered. We had opened an account with a credit union. The kids all got new accounts. That was 12 years ago, maybe 8 years ago. I don't think it was that long ago. But these other accounts basically just sat there. And there's not a lot of money in them, but we chose to open Roth IRAs. The kids all worked for us. So ultimately, we opened Roth IRAs. They have earned income. They were able to take that money that was theirs and put it into a Roth IRA. Now, what's cool about the Roth IRA, after tax donation or contribution rather, and then no taxes. Pretty amazing. So for fun, back to Miller's, we're sitting at the table one night and I said, guys, just get out, find a compound calculator, and let's just run some numbers. Now, mind you, my kids are like 20, 18, and 16. And I just said, listen, by the time you retire, cancer's going to be cured. You're going to have bionic arms, whatever the case may be. Minimum probably 70, and I think much higher is likely the retirement age. But you've got 50 years. So we started just running numbers, what a Roth IRA would do for them over 50 years with the amount that they had in there. And I'm not going to lie, it's staggering. So number 2 is compound interest. Number 3 is, because I made all these notes here, is diversification. So like when we think about why you might want to invest as opposed to pay the mortgage off early, it allows you to further diversify. So you could buy different kinds of stocks. Maybe you want to get a little bit into crypto. Maybe you want to buy real estate, in addition to your primary home. So there's a lot of different things you can do to help with diversification. And of course, we have to remember any investment comes with risk. So it doesn't necessarily mean you are going to come out ahead. There's periods of time where the S&P has done poorly. There's periods of time like this year. I think year to date, we're up 24%. Hard to beat 24% in a year, by the way. So at the end of the day, though, there is volatility. There is risk with any investment. So again, you're not guaranteed to outperform just because you go that route. And let's not underestimate the psychological effect. The idea of being debt-free for so many people is high on the list. There is something very gratifying about being debt-free, not being as vulnerable to income loss or illness or other things that put more strain on you. And let's be honest, I know I'm not the only one that's ever sat there and thought, man, it's like when I paid off my student loans. I remember writing that last check. I think most of us have thought the same thing about a mortgage. So at the end of the day, how do you determine what's right for you, whether paying off the mortgage early or making additional investments? Let me first just say there's no right answer. So I did write a couple questions down, and I'm just going to read them to you. The first one you might want to consider is, what's your mortgage interest rate and how does that compare to the expected returns that you think you can make? Obviously, you're going to have all kinds of investment options. You have everything from CDs to low risk, medium risk, high risk type investments. The second thing you might want to think about is, do you have other high interest debt like credit cards or whatnot that you want to pay off first? That might be a better consideration. The third question is, how secure is your income? If you think you're at risk of losing income or seeing a fluctuation, your income going down, maybe you're in an industry that's trending towards potentially being replaced by AI, who knows? There's all kinds of change coming. That might be a consideration. The fourth one I had was, what are your financial goals and what is your risk tolerance? That's going to weigh heavily into the equation of how you want to balance being debt free. I think you're going to lean that way if you have lower risk tolerance versus making investments. Maybe you want to bet the horse or bet the farm or bet the house in this case. And the last one I was thinking about is, Do you have, or do you value financial flexibility over higher returns? So again, it just comes down to priorities for you. And again, there's no right answer. It's just these are the things that you have to answer for yourself and what's right for you and your family. So as you might have seen over the course of this video, there's no one way, there's no right way, there's no wrong way, there's your way. And at the end of the day, having these conversations is a good thing. Maybe you grew up in a house like mine where you don't talk about money. I don't agree with that anymore. Like, I'm around people that are willing to talk about money and investments that they're making and how they choose to protect it and how they want to earn it, protect it, grow it, whatever it might be. So the most critical part of this, though, is to get the team around you so that you can consult, whether it's a tax planner, your CPA, a financial planner, whatever it might be. Get those people in place, because again, I'm not a financial planner, so I'm not giving you advice. I'm just sparking, hopefully, some ideas about things that you might want to do and or conversations that you might want to have. All right, so wrapping this up, whether you choose to pay off the mortgage or make additional investments, my only goal in this is to help you be informed in the decision making. I hope you find this helpful. If you do, please like, subscribe, share. We'll get back to more normal topics. I think Angie's back up next week, so we'll get back to really talking about real estate here in Southwest Florida. Don't forget, live joy.